Good evening, grade 9s. I'm showing you today, I just quickly want to show you what a debtors journal looks like. We've already done it in class, but let's just quickly recap. I do not have the transactions now, so I'm going to be explaining to you what is happening here. Now, if you look at a debtors journal, you'll see that there are various columns here. But before we can do that, when will you enter information into the debtors journal? Whenever you issue or you give an invoice to a person, then you know that they have bought from you on credit. Therefore, you must write it down in the debtors journal. So every time a person buys from you on credit, you record that transaction in the debtors journal. Now, it has a column for document. What goes into the document column? Obviously, the invoice number, because that is the source document. Okay, so the source document is your invoice, and you write the number of the invoice down on the source document or in the source document column. Then obviously you've got the day of the month, in this case, the day of January. So this happened on the 2nd of January. And then you write the name down of the debtor that bought from you on credit on the 2nd, which in this case is A Toza. Okay. Then you write down the sales amount and then the cost price. So the only thing that can be difficult, if you want to say, in this specific journal is the fact that you have to either calculate cost price or you have to calculate your sales price. Okay, now let us just quickly recap. How do you calculate cost price? Okay, cost price equals sales price over 1 times 100 divided by 100 plus the markup. And when you have to calculate sales price, it's cost price over 1, and then this one here just turns around. So then you'll have 100 plus markup divided by 100. Okay, how can you remember which one goes on top? Now, I use associations when I teach because I know that will help you remember. So how would you remember that the 100 goes with the sales price here in this specific calculation? I used to always teach my learners, to use an association to help them remember. So I used to say, when you sell sales price, it would be amazing if you can make 100% profit. Okay, so that's just the association I use for them to help them remember that the 100 goes with the SP. And then with CP, the 100 goes below. Okay, so that's just a tip to remember the calculations, but you have to study this off by heart. You need to know the calculations. So in the transaction, they would either give you both or you have to calculate one of the two. Okay, so after you have written down the invoice number, the day, the data, the sales price, and the cost price, you simply go and you see, okay, A Toza is my data number 1. And B Sutu is my data number 2. So this will remain the code, if you may, of this specific data until this person is not a data of yours anymore. So these will also be the codes, if you may, that will be given to the data in the ledger. Okay, so this is just to recap the debtors journal. Now, what do we do when this person pays us the money they owe us back, or they pay a portion of this money back? Then obviously you receive money. So then you write it in the cash receipts journal. You write the day, you write the receipt number, you write the data, you write the number of or the code of the data. Is it data 1? Is it data 2? Then you write the amount you received from him. If it's the last amount you receive for the day, you draw a line and you take it to the bank. And then you go and you book it or you reflect it in the debtors journal column. Okay, to show yourself that this person, or to record that this person has paid the debt or the money that they owe us. Okay, so that is what your debtors control column is for. Right, so I hope that you understand this. I want to quickly move on with the general ledger. Okay, so we are still busy with debtors control. And I quickly want to show you something great nice. I want you to take a piece of paper and I want you to divide it into half. Now, remember in accounting, if you are a business that sells trading stock, you either sell it cash or you're going to sell it on credit. Okay, so you either sell on credit your trading stock or you sell cash. That means you receive the money immediately. Now, selling trading stock and receiving the money immediately is the work that we've done in the first term. We've started grade 9 with that. So you need to know by now that when we sell and we receive cash for it or we receive money for it, in which journal do we reflect this information on? Which journal do we write it down? In the cash receipts journal. Then when we go to the ledger, the following 4 accounts will be involved. We have sales. Okay, and because we are receiving money, it goes to bank. Okay, so this is your first entry. Then we must reflect what we are selling. We are selling trading stock, and the value of this trading stock is cost of sales. So this is your second entry of a sales transaction. Okay, and as we know, and as you should know by now, sales is an owner's equity account, which makes it debit minus credit plus. Bank is an asset, and that makes it debit plus credit minus. Trading stock is an asset, debit plus credit minus. And cost of sales is an owner's equity, debit minus credit plus. Okay, and when we sell, remember, sales is never an expense. Sales is always an income. If sales is credited, bank is debited. And I mean, it's in any case true because bank receives money when you sell. When you sell, your trading stock decreases, okay? Because the person that buys it from you takes it home with him. So you do not have this trading stock on the shelf anymore. So your trading stock decreases. If trading stock is credited, then cost of sales is debited. And we know that cost of sales is never an income, okay? But what do we do when we sell on credit? When we sell on credit, it's exactly the same. But, okay, so let me just quickly say, it's exactly the same. Let us quickly do it together. You will still have sales, okay, as we have here. But when you sell on credit, you do not receive money. So bank is going to be replaced by debtors control. Debtors control. Okay, because we're not receiving money, we are still having a sale, but it's on credit, and the person that buys from us on credit is in debt to us, so they are called our debtors. Okay, but we are still selling trading stock, so that is still involved, trading stock. And the value of the trading stock is still cost of sales. Okay, so this is still your first entry, and this is still your second entry. So these two go together and these two go together. Now let's quickly focus on sales. So sales will always and is always an owner's equity, which is debit minus credit plus. And debtors control is an asset, debit plus credit minus. Trading stock is an asset, debit plus credit minus. And cost of sales is an owner's equity, debit minus credit plus. Okay, now I want to just quickly stand still with these two accounts. Okay, so I'm just going to make it larger. Okay. When we sell, doesn't matter whether we are selling on credit or whether we are selling on cash, sales is never an expense. It is always an income in your normal sale transactions, whether it's credit or whether it is cash that you are receiving. Okay, so sales will be credited, this is the credit side, with debtors control. So you're going to write debtors control, DJ, and then the sales amount. If sales is credited with debtors control, then debtors control will be debited with sales, DJ, and you're going to write that same amount here. Okay. So you can see that it works exactly like a cash sale. Sales is still being credited, but we do not have bank that's debited because we're not receiving money when we are selling on credit. They owe us that money. They are in debt to us. That's why we debit debtors control. Okay. We are still selling trading stock, so trading stock decreases. If trading stock is credited with cost of sales, then cost of sales is debited with trading stock. Okay, so this is basically the difference between cash sales and a credit sale, which is new work. So please make sure that you understand these concepts. Okay, now I want to do the general ledger with you. And what I want to ask you is that you go and you study the general ledger off by heart. So this is what the general ledger looks like. You will have a balance sheet account section that will have all your assets, and you will have a nominal account section that has all your income and your expenses. Okay, now I'm going to teach you today in EMS accounting, term 3, what are all the possible entries that you will have in your general ledger, and you can actually go and study those off by heart, and I'm going to also explain it to you. Okay, so let us start with the debtors control. Okay, debtors control is an asset. That's why it is debit plus, credit minus. Okay, and for those that do not understand accounting, remember this middle line here separates the debit side from the credit side. So remember what I taught you. Debtors control is always debited, and when the debtor pays, it will be credited. Now, before you complete a general ledger, you have to ask yourself, are there any balances brought downs given to us? What is a balance brought down? Usually, they will give you a table before you have to complete this ledger, and they will say that the balances for the 1st of January is as follows. Okay, so then they give you the balances. They will write bank, for instance, 2,000 Rand. They will write sales, 3,000 Rand, etc. Okay, so they will give it to you in a table form. Then you know that these amounts here must first be placed in your general ledger as a balance brought down. Okay, so let's say it's debtors control. Then you will have your balance brought down listed here, and then you will obviously, if it's in the table, you will write balance brought down on the 1st of January. Okay, so I open my debtors control account with the balance brought down from last month, and then you will write the amount down. Okay, if there isn't a balance brought down, then you simply leave this open. You don't fill that in. The next entry that you will have in your debtors control, on this side, you will have sales, DJ. Okay, so that means, remember, debtors control is always debited. So every time they buy from us on credit sales, according to the debtors journal, then you write it on the debit side. And when this debtor pays, or the debtors pays the debt that they owe us, you're going to write it on the credit side. So you will write bank, CRJ, and then the amount according to your CRJ in the debtors control column. And that will also be on the 31st of Jan. Here you will also write the last day of the month. So let us just quickly see where you will get this information. Okay, so this amount here, the sales amount here, comes from your debtors journal. Okay, this is your debtors journal. So this sales amount is the total of sales that you had on credit to debtors. So that is why you write sales, debtors journal, 6,000 Rand, you would write it down there. Okay, this is the amount of money that our debtors paid us back for the month. So you will have to go to the CRJ, we'll have to go to the CRJ, and you will have to go to the debtors control column, this amount here, 4,000 Rand, and you will write it down there. Okay. And then remember, after you have done this, you'll see that there's something written down on the debit side, something written down on the credit side. So you have to prepare, or have to balance this account. So what is the steps, or what are the steps? You leave a line open, then you draw total columns. Okay, and the total columns need to be in the amount columns. And then you ask yourself, which of these amounts are the biggest? Do you write the largest or the biggest total down here? So let's say that plus that will give you that total. But here you will need to calculate in order to get that. So then you write balance, you're calculating it, carry it down, this amount minus that amount, and you write the total there. Your balance carry down becomes your balance brought down, and that same amount goes here, and it is for the first of the next month, which is February. I will have a balance brought down of that amount. So I want you to go and study this off by heart for now. Okay, now let us look at the trading stock account. As we know, trading stock is an asset, debit plus, credit minus. Now let us quickly look at this. Trading stock will always have their balance brought down on the debit side. Okay. So if they give the balance brought down to you before the transactions, then you know that you have to fill it in. If it's not given to you, you do not write balance brought down. You just carry on with the account. So now I'm going to ask you, when do you think will your trading stock increase? Obviously, when you buy trading stock. So you will write bank, CPJ for cash payment journal, and then the amount or the total of the trading stock account in your CPJ. That amount will go there. So your trading stock only increases when you buy trading stock. When does your trading stock decrease? Every time you sell goods, okay? And remember, trading stock goes with cost of sales. And you have two types of sales usually. You've got cash sales, CRJ, and you've got credit sales, which is your debtors journal. Okay, and that's on the last day of the month. So where do you get this information? When you go to your cash receipts journal, for that one there, cash receipt journal, you'll see that there's a cost of sales column. That amount goes here. And the cost of sales from the debtors journal, that is the cost of sales amount that you find in the debtors journal here, the total. That amount, 3,000 Rand, that amount goes here. Okay. But I'm not going to write the amounts down now because I want you to go and study this off by heart. You need to understand the account. When you look at this account, you need to be able to tell me a story of what happened throughout the month. Okay, so when you are done with this, you have to balance it. So what are the rules? You leave a line open. You draw total columns. Step 2, you determine which of the two sides has the largest amount and you place the largest total in the total columns. Okay. This amount here plus this amount here must give you the total here. This amount here plus this amount here will give you the total here. So usually you'll have your balance carried down on the credit side. Okay. Then you must bring it down to the opposite side. Then it becomes balance brought down and the total amount on the 1st of February. So I want you to go and study that off by heart. Okay, now we've got the bank account. Now this one is grade 8 work, the most easiest one. So usually now with bank, you can either have a balance brought down to start the month with, and it can either be on your debit side or on your credit side, depending whether you have made profit or a loss the previous month. Okay, so it can be any side. For now, I'm going to just write it on the debit side because usually in the test, it is always a positive balance. So it's balance brought down and the amount, and we start the month with this balance. Just to recap, where do I get this balance brought down? Usually they give it to you and they state that these are the balances for the beginning of the month. Okay, now after you have completed your balance brought down, and if there isn't a balance, you don't write it down, you just continue with the account. On the debit side, bank is an asset, so it increases on the debit side and it decreases on the credit side. So on the debit side, you're going to write total receipts, cash receipts journal on the 31st of Jan. Remember, it's a column total. That's why you book it over the end of the month. You're going to write the amount. On the credit side, it decreases. So you write total payments, cash payment journal, and the amount. And it's on the 31st of January. Okay, so just to recap, where do we get that information? If you go to your cash receipts journal, you'll see that there's a bank column that is for your total receipts, cash receipts journal. This bank amount here in the CPJ is for my total payments, cash payment journal. So that is where you will get the information you must place in bank. Okay, then we have to calculate a balance again. So you simply leave a line open, you make the total columns, you calculate your balance carry down, and then you bring it down to the opposite side. I'm not going to do that now because I'm sure that you know how to do it by now. Okay, so then we only have 2 more accounts left. We've got a sales account. Now, sales account is an owner's equity account. So it decreases on the debit side, or it's an expense on the debit side, and it is an income on the credit side. Now, you know that you never write, for EMS accounting, you never write on the debit side of sales. Because in EMS accounting, we are not doing returns yet. So we are just selling, and when you sell, you always make a profit. So that is why you write on the credit side. So if you have a balance brought down for sales, it will go on the credit side. So you will write balance brought down and the amount on the 1st of Jan. If you do not have a balance brought down given to you, then you do not write that down. Okay, now we've got 2 types of sales. We've got a sales according to the cash receipts journal. So then you will write bank, cash receipts journal. And we have our credit sales. Now you must be careful here. Remember when I did the T accounts with you, we said that when we have a credit sale, now that's what I'm going to explain now. We have sales and we have debtors control, trading stock, and cost of sales. Okay, so you cannot write anything here. You must be very careful. You cannot write sundry accounts or anything else here, you must go back and see what happened to the debtors control account. Debtors control was debited with sales. And what did I teach you in accounting? And what is the principle of accounting? When the one account is debited with an account, this account must be credited with the one. For instance, if debtors control is debited with sales, DJ, then sales must be opposite, credited with debtors control. So I'm going to say that one more time. When debtors control is debited with sales, then sales must be credited with debtors control. So that is why we write debtors control here. Okay, because it's a credit sale that took place according to the DJ, and so it's sales and debtors control. And here we had a cash sale that took place, so it's bank and sales. Okay, now what do you do when there's nothing written on the debit side and everything is written on the credit side? All you do is you just draw a line and you add these amounts together and you write the total down. Yeah, then you finished basically. Okay, so now the last account that you must study is cost of sales. Okay, now cost of sales goes with trading stock. But before we explain that, let's quickly just confirm. Cost of sales is an owner's equity account. So it is debit minus credit plus. Cost of sales is never an income in EMS accounting. Okay, we do not write on the credit side in EMS accounting because we do not do returns. Okay, so cost of sales will always be debited in EMS accounting. So if you have a balance drawdown, you will write it on the debit side. Okay, so we will write it on the first of the month, which is January, balance drawdown. If this has not been given to you, then you do not write it down. Then you go over to the next step. Cost of sales is always debited with trading stock. You must go and study that. Because I am selling trading stock to the value of cost of sales. Me. Now I've sold on credit. So it's trading stock DJ, and I've sold cash, trading stock CRJ. Okay, if you are unsure about where this information comes from, if you look at the trading stock account, you'll see trading stock has been credited with cost of sales. If trading stock is credited with cost of sales, then cost of sales must be debited with trading stock. So the amount that you wrote here next to the CRJ and the amount that you wrote here next to the DJ in the trading stock, those same amounts goes here. When you are done with this, you have to just simply draw a line here and you add it up and you write the total down. And then you are done with the cost of sales account. So this is your general ledger. Now, why am I doing this with you? Because my advice to you would be to go and study this off by heart so that when you get to the test, make sure you understand it, obviously, but when you get to the test, you simply have to go to the respective journals and find the amounts. And then you know that your format is correct. So this is the general ledger in accounting that you are writing on. And I hope this lesson helped.